All of this leading some economists to warn of lower economic growth in China. So is this another punch to the gut for investors, not just over there, but investors here who may be playing that market? Joining us now is KraneShares Chief Investment Officer Brendan Ahern. Brendan, welcome. Good to have you with us. What's going on in China? I have to say that over the past few weeks, a lot of things have been unsettling. Of course, there's the matter of the debt-plagued real estate company. There is a power shortage now that is affecting industrial output. There are supply chain blockages and hairballs across the globe and out of these kinds of things, it seems to me a global recession could be spun. Am I wrong?
Well, we think the coal shortages in China today are really affecting two different parts of China's economy. One, you have it affecting the industrial output. So we've seen that prices of coke futures, which really are used for steel making, those prices have risen quite dramatically. At the same time, we've seen thermal coal prices, which are used more in electrical transmission and for heating. Those prices have risen. Now, some of this is because of China's strong commitments to trying to limit coal. At the same time, we're seeing that due to some mining safety issues, output of coal in China has come down, as well as China is lessening the imports from Australia just due to some political rhetoric issues. So ultimately, China's kind of short on coal. And I think it's worth pointing out, Tyler, this is something that we're seeing in the European Union as well as the United Kingdom, where due to high LNG prices, a slowdown in the amount of wind generation in Europe, we're seeing similar very high energy prices. So something that I think you're right, it's something that's a little bit of a concern, not just on a China perspective, but globally.
But globally, I mean, when you have these kinds of input costs going up, it not only affects margins, obviously, but it affects output. And you have, in China's case, the possibility of a not negligible decline in GDP.
Well, I think we're apt to see the Chinese authorities respond by opening up their commodity strategic reserves. That's something we saw about a month ago. Very likely apt to see that again. It might actually pave the way to potentially smoother relationships with Australia, where China has a strong demand for Australia coal imports that have really lagged. At the same time, they might tap the brakes on some of the push to clean technology, solar, wind, hydro, nuclear. They got to maybe give those industries a little more time before pushing a very strong commitment toward clean energy. So unfortunately, coal might be used as a stopgap. They're going to have to ramp up production.
And even there, the prices are up, and we're already talking about, shortages and issues, Brendan. So I don't know what's going to happen going. The weird thing is that the way that China's own press is writing about it, talking about the need to ration and conserve, and you wonder, if this is from the sort of more or less the Communist Party itself, like what's really going on. In the meantime, we have people marking down their GDP forecasts. And I was just looking at the performance of KWEB. It's been pretty steady. We're still down, maybe 50, 60% from the highs back in the spring. But it's almost as if this is not more of a concern than everything we've already been through with China. So, we're looking at the Nomura forecast. They've taken down their growth forecast for China by about 0.5 percentage point, but still 7.7%. Are they going to be able to muddle through here?
Yeah, I mean, I think the GDP forecasts are coming down from slightly above 8% now to a little bit below it, based on the economists. So certainly, I think there's talk about trying to lessen some of the demand from a consumer perspective. At the same time, part of the problem is that due to the very high prices, a lot of the electrical transmission companies are lessening output, and I think that's where there'll be a lot of pressure put on those electrical transmission companies to ramp up production. That ultimately this is probably going to hit some of the profits of some of the utility companies, because they're going to be told you have to ramp up this production regardless of price. The economy needs that energy, and that's probably going to fall on a little bit of the balance sheet of some of these utility companies.
Right, but again, your internet ETF, I don't think includes them, right?
Definitely not. Definitely not.
Brendan, thanks for joining us today. Brendan Ahern of KraneShares.